Hey guys, what's going on? It's Jason here. Today I wanted to bring you guys three great stocks that I think is going to make you a lot of money in the future. A couple of these stocks are more long-term holds. One of them is more of a short-term hold. Obviously, we'll get into that in a bit. If you guys are new to the channel, make sure to hit the sub button below. Also, if you could leave a like below, that definitely helps out a lot. Remember, if you don't use Webull, there's a link down below in the description. You use Webull right now to get two free stocks worth up to $1,850. All you got to do is sign up on Webull, put in $100, and boom, voila, you will have your chance to win two free stocks up to $1,850. I know a couple people last week got a couple of Facebook stocks worth about $270. That's something interesting to you. Like I said, the link is down in the description. Starting off first, we're going to start out with XPENG. I know a lot of people are probably familiar with this play. It's an EV play, a lot of wrong side of the likes of Neo or Tesla. Right now, XPeng is at a very, very low rate in terms of right now is the dip, and right now is the time to buy. This is a long-term hold. XPeng is going to be growing exponentially in the near future. Right now, the analysts have it as a high of up to $70 within the next year. Some analysts even have it higher than that. The average is $53.93. Remember, it's trading right now for $47, which is a bargain basement price compared to where this was actually at just a few months ago at $70. Again, I think this EV play is going to be blasting through that $70 mark. I do own shares in XPeng. They have a positive outlook on their cars. They're starting to put their cars over into Europe now, which a lot of other car makers have not yet, including Neo. Yeah, Neo's a great play on the EV, and I do own Neo as well. But I think XPeng, at least, you should be on your radar. If not, should be in your EV club when it comes to you buying in them. First, I want to show you guys what other people are doing. The big guys, the people that have a lot more insight than we do. What are they doing? And they're buying right now. And I mean buying, they're buying a lot. Bank of America just bought on the 10th. You got Bluefin Capital just bought on the 10th. Ava PLC just bought. Harvest Fund Management just bought on the 10th. All these groups are just literally just bought on the 10th. You have a lot of groups down here buying on the 10th as well. They know a lot more than we do, and they're very, very smart people when it comes to investing their money. So again, this is good plays right here. That's 5 million stocks right there from Affirm LLC. Like I said, again, there's a lot of buying in the past few days of XPeng, and a part of that is because XPeng is moving over into the European market, and they're seeing the potential, whereas Neo hasn't done that yet. Though Neo has a lot of positives, I think XPeng is doing some good doing that. I'll read you guys some of this from an investor plays. As a strong competitor to Neo and Tesla, XPeng is definitely a long-term investment. The company has impressive delivery numbers and is making moves into the European market. And XPeng has they shipped 100, obviously, last year, G3 over to Norway. I went over this in the stream in the channel as well a lot. They did ship some G3 over to Norway, which Norway is pretty much the fastest growing, I think, of the European market right now in terms of switching over to electric cars. Now the company has started the new year off with a bang, shipping a second delivery of SUVs to the country. Of course, that's great news, but you may be wondering why Norway. XPeng is building out its market in Europe. Due to favorable government policies, Norway is the high rate of EV ownership, has the highest rate of EV ownership in the world. So the EV maker is making smart moves and is right where all the action is. But that's not all. According to Fleet Europe, the UK saw EV rise from 3% in 2019 to 10% in 2020. And they're expected to outsell diesels in 2021. In Norway, electric car registration stood up 42% in 2019 and climbed to 54% in 2020. In fact, Norway is the first country to have EVs accounts for more than half of new registrations. In all, Norway has a solid EV promotion policy that has led to boosted demand, and the rest of Europe is following suit. But remember, like I said, XPENG is moving into Europe, whereas Neo and them haven't obviously yet. Right here it says, for example, and also again the EV G3 is affordable. Remember, some of these like Neo and them are making crazy expensive cars, which is good. They're doing that price up and then coming down on some of their on different models. Just like Neo just came out with their new sedan, the more expensive model, and eventually come out with the more cheap model, which is one reason why I think Neo's stock kind of tumbled a little bit and stayed pretty steady for a while. But again, I am look very positive for Neo as well. Like I said, I do own both of these stocks. The car offers a decent range and some of the latest technologies. So despite putting out relative small shipments, the company has been able to make a good impression and growing market in Europe. So they're getting more and more demand again. XPENG is into getting their cars over to Europe. XPENG's rival Li Auto and Neo, meanwhile, have yet to make a mark in the Europe. So again, remember, they're pushing out these cars too, and XPENG is up to 6,015 units again a month at this point. So they're up there, and that's one reason again why I'm pushing XPENG right now. The prices came down; they had a little fallout. And I think right now is the time to buy. Again, you should do your own research. I'm not a financial advisor, so you definitely should look into XPENG if you don't own XPENG already. Right now is a great time to buy with it being on the red for the last couple of days. Again, greener pastures are on the horizon, and XPENG is a great stock to buy into now. Okay, next up we got pavem Inc., which is a ticker PAVM. Right now it's selling for $3.21. They have an outlook of $5 plus, depending on where you look. Some places at $5, some places even have up to $10 right now. Don't really matter, obviously, because that's even if it went to $5, that's a really good return on your investment. Now you're wondering what PVM does. PVM has a esophageal diagnostic tool that should create a strong shareholder value. PaveMed is a suite of medical devices that improve on the current standard of care in multiple areas. Based on its opportunity in esophageal cancer screenings alone, the company looks substantially undervalued with a current market cap of $135 million. As an added bonus, PaveMed's CEO owns around 15% of the outstanding shares, strongly suggesting he will be looking out for the long-term shareholder value. That's really good when a CEO has a big amount of shares in the company. That means they're very confident in what they're doing, and he also wants to grow his share. You know what I mean? So they have a breakthrough tool for esophageal cancer, which is really big and huge. PaveMed is a small medical device company that is involved in the trendy early cancer detection space. The company's esophageal cancer early detection combination of minimal invasive sample collector with a proprietary testing methodology looks poised to make a market share starting in 2021. Now, the Medicare has begun reimbursing for this test as of January 1st, 2021. I recently added PaveMed shares to my portfolio. Again, a lot of people are adding PaveMed to their portfolio. Again, this is breakthrough. Throat cancer, stuff like that, has been on the rise, and them having a early detection device that can get an early sign faster than anything yet to be made. It's huge. PaveMed has incredibly wide variety of medical devices technology in its portfolio, though. So it's not just that. In addition, the GI health products on which I'll focus in this article, PaveMed has products in minimally invasive carpal tunnel surgeries, easier vascular access, single-use disposable IV administration, and non-invasive glucose monitoring. If this company has it all. This is definitely a medical company you should have on your radar. This would be a anywhere from a short-term or to a long-term hold. I did also just purchase some of PaveMed as well. Dude, obviously I'm a diabetic, but it has some really cool stuff for diabetes, glucose monitoring. And not only that, like I said, the main tool, which is that early detection for and less invasive detection for esophageal cancers, which is actually on the rise within the last 10 years. Again, this company is just something you should definitely have on your radar. I'm going to look over here again and show you guys who's been buying in these big companies that have even more knowledge than we do when it comes to the insider trading, right? And if you want to think like a millionaire or a billionaire, you have to go to where they're buying. And literally, they've been buying it like hotcakes since January. You have shares up the board. Wells and Fargo, Bank of America buying in. Just a lot buying into this company. I definitely think this is something you should have on your radar. Again, the price target on this is anywhere from $5 to $10. It's selling at $3 right now. Next on this list is Checkpoint Therapeutics. A lot of people have been doing high praises on Checkpoint Therapeutics. You may have heard of them already. If not, they're a big therapeutic company that has a lot in the works and a lot of FDA approvals coming up that could set this company off. Right now, it's trading at $4, and it has a high outlook of $20 right now. So even if it went to medium 1767, you're tripling your money, right? You're tripling your money there. More than tripling, really, almost quadrupling. If it does go to the 20, you'll be quadrupling your money. That's what we call a home run. And again, I'll take you to this again with the Checkpoint Therapeutics. A lot of companies have been buying in, including Bank of America. It seems like Bank of America has been on all the stuff we've been covering here lately. There's been a lot of Bank of America. You got Bank of New York right there. You got ProShare Advisors. You got BlackRock. BlackRock's buying in as well. Anytime you see BlackRock on a train, it's a good bet to jump on that train because BlackRock knows a lot. They bought 3 million shares of Checkpoint Therapeutics. You're asking yourself, what does Checkpoint Therapeutics do? Checkpoint Therapeutics develops and commercializes immune-enhanced combination treatments for solid tumor cancers. They also have 2 drug candidates in the works, which is CK101 and CK301. Both of these have been having really great successes in their clinical trials. It's for CK101 is for small molecular targeted anti-cancer agent, currently under phase 1/2 clinical study for the treatment of specific non-small cell lung cancer, which is on the rise as well. The drug candidate targets cancers susceptible to the EGFR mutation, making it acceptable to approximately 20% of NSCLC patients. The drug has shown promise compared to traditional chemotherapy treatments. Further studies will test CK101 against tumor progression due to resistant mutations. And then they got their second candidate, which is CK301, is an antibody drug currently in phase 1 clinical trial focused on patients with selected recurrent metastatic cancers. The selected cancers include NSCLC, so it targets the other side of the NSCLC cancers, as well as metastatic melanoma, renal cell carcinoma, head and neck cancer, urethral carcinoma. All these cancers are responsible for therapeutic action on CK301 and anti-tumor response due to blocking the PD-1, PD-L1 interaction. Again, we probably don't know what this is. Neither do I, and I'll probably look that up. Again, this is huge news. When you get drugs like this that come out and help people survive that used to not be able to survive from these cancers, because these are very serious cancers. That's a good thing. CK301 has shown 44% objective response rate in treated patients during the phase 1 study. So great, that's really good. You have 40 to 50% effective rate in a phase 1 study. That's huge news, right? Along with a 10.3 month median progression-free survival rate when compared to currently available approved treatments. This is giving people a longer life to live, to spend time with their family. Checkpoint Therapeutics should definitely be on your radar. I am not a financial survivor. I keep saying that. I might not be a financial survivor sometimes. It feels like it. We usually do pretty good here, right? I am not a financial advisor, though. And again, you should be doing your own research into these companies. These are 3 great companies. Again, that is XPENG, PaveMed Inc., and Checkpoint Therapeutics. If you could, again, make sure to leave a like down below. If you're not a sub, hit the sub button, and I'll see you guys in the next one.